Hey guys, this is take 2 on recording. I started recording the first time, and Screen-O-Matic is what I use. And the free version, you're only allowed to record 15 minutes. Turns out it took me a little bit of time to figure out this problem, and I reached my maximum time, like as I was just about to complete the problem. So I'm just going to kind of go through this a little bit quicker. So basically, this is just a regular 3 sheets that we usually do: your balance sheet, income statement, and retained earnings, and the balance sheet. So it's it's logged a little bit differently. So we'll just have to add it up. So what we start off with is the income statement. It's for the month ended August 31st. It gives you a couple different options, but it is the month ended August 31st. For revenues, you come up here, and the way that it's organized, it's kind of like that basic equation. So you have retained earnings, and then it says revenues minus expenses minus dividends. So as you come down here, you'll see all the expenses. Since it's revenues minus expenses, all the expenses are recorded as negatives. Revenues are recorded as positives. Dividends recorded as negatives, because that's how it flows in the formula. So we come over here, revenues, $9,300. And right here it tells us it's a service revenue. So we type in service revenue, $9,300. Next thing is expenses. Sorry, I got allergies, so I might do like this winky thing. I'm not winking at you because I don't know who's watching. I might be winking at you, but it's unintentional. I just have allergies. So you come here, and there's 3 different expenses. They're labeled right underneath expenses, which is in the formula. $934.23, and it gives you a basic label: salary expense, utility expense, and rent expense. I always do mine in order of biggest to small. So we have salaries expense $3,400, rent expense $900, utility expense $2,300. Total expenses comes right after that. You just add them together. It comes to $4,530. Then what you do is you just do net income, which is your revenues minus expenses. It comes to $4,770. Next one is your retained earnings statement. So that's for the month ended August 31st, 2017. Retained earnings at the beginning of the month was 0 because it's a brand new company. There hasn't been any previous months to have retained earnings. Even though it doesn't tell you here that there's 0 retained earnings, it's a new company, and since it doesn't say anywhere, you know that it is 0. Okay, so come down here. So retained earnings, and then you're going to add net income. You add it because it's a positive, but you would say less if you lost money this year. So $4,770. Then you just add those two together, $4,770. You do less dividends. It's always less dividends. And here under dividends, in that dividends column, it shows you $1,400. If you don't see that big one right there, it does say it right next to it, dividends. So you do $1,400. You don't have to put a negative there because you already said less right there. It won't let me highlight it. So then you just do $4,770 minus the $1,400, and you say retained earnings for the end of the month, $3,370. And now this is where I was before I reached my max time, which is great because I probably rambled on a lot because I'm only at 4 minutes instead of 15 minutes now. But so basically, I started off by saying the month ended August 31st. I think this one you technically just say August 31st, but we'll find out. I get 3 attempts. So you always start off current assets. Here's all the assets that you have labeled right underneath assets. Your current assets are actually only these 3 because because they're liquid. You'll be able to use them within the upcoming year. So what you do to get the cash is literally this row right here, 1,500. You just put this in a calculator as is. So 15,200 minus 1,190 minus 700 plus, you get the drift. So you just go through all that, and the total you get is 9,590. You do the same thing for accounts receivable. 6,000 minus 380, you get 5,620. Supplies, there's no minus, it's only positive. So you do $700. And that's it for your total, there it is, $700. And that's it for your total current assets. So you'd say total current assets, 15,910. After that, there's typically a title saying property, land, and equipment, and then, or long-term assets or something like that. For some reason, this is not telling you to do that. So underneath total current assets, you're just going to write equipment and what the total was, which is right here underneath equipment. So 4,940, just put that right there. And you know this bottom one is going to be the total assets because it's the bottom line. So that's like, you total everything up. You got the double line, which is like your equals. It's like, I guess there's a couple different ways you can look at that, but I just think of it like that's the final section. So total assets, you just add up that, the total current assets, and your equipment. You get 20,850. And now we move on to current liabilities. There it is. So current liabilities, you come up here, you look at liabilities. And it's accounts payable is the only liability that they have. You can tell that because it's right underneath the liability section. So what you do is you just add those up. My handy dandy notebook, Blue's Clues. You just add those up as is. So 3,750 minus 1,700 plus 230 equals 2,280. 2,280, and we know that was called accounts payable because it was labeled. And then typically I would write down long-term or total current liabilities. This is, I guess, a shortened version of the sheet because it's not saying it. So I'm going to go ahead and go to stockholders' equity. And we're going to say common stock. Common stock always goes on top, and stockholders' equity. Come up to the top here. Common stock is $15,200. So we're going to come back down here. $15,200. And then we're going to go into retained earnings. I think that's right. That's what it says, right? Retained earnings. Which we already have our retained earnings, which is right here, 3,370. We're just going to put that in here, 3,370. Total stockholders' equity, you're going to add those two together. 15,200 plus 3,370 equals 18,570. Now you're going to say total stockholders' equity and liabilities. Total liabilities and stockholders' equity. Going to add those together. So 18,570 plus 2,280 equals 20,850. And you can double check yourself because assets always equal liabilities and stockholders' equity. And 20,850, 20,850, that's correct. So, oh no! Okay. My webcam was over the submit answer button. So submitting answer. Okay. It is. I guess balance sheet is just the date. So I'm going to submit that one more time. And ta-da! We have the correct answer. Now,